the solution is really very easy. It's so easy people don't want to believe it. We should have a gold standard. Simple as that. We should take away from the politicians the power to create money out of thin air.
Under a gold standard, you wouldn't have any inflation because you wouldn't allow a government monopoly, the Federal Reserve, to print money out of thin air. I mean, there's the problem. You have a Congress that votes themselves largesse, that is, give the people whatever they want, they keep themselves in office, they build these political power bases, then they really don't have to act responsible about collecting any money to pay the bills. They just go and print it, send the Treasury bills to the Federal Reserve, and the Federal Reserve creates the credit. That's inflation. The money supply goes up, the value of the dollar goes down, and prices go up, and then it distorts the economy. So yes, we want a sound, honest monetary standard. It doesn't mean that we demand that the government institute a gold standard, but we demand honesty in money, that money be something sound and honest. They claim taxes went down under Ronald Reagan, but they were raised 6 times under Ronald Reagan as well, and the deficit exploded. The national debt went from less than $1 trillion to over $3 trillion in that decade. Government debt is growing at 13.9% per year. So it's awful frustrating to endorse the same old parties, Republicans and Democrats, and never see significant change.
We have a long way to go before we will have stable, healthy currencies throughout the world or a sound dollar once again. The welfare state is coming to an end. And I think that's what the message is, and this is why so many people are frustrated and upset today, and yet they don't know exactly why. They're striking out. They think that a Ross Perot or a Colin Powell will solve the problems. Believe me, there's no answers there for the economic problems we face today. We have serious problems that will only be solved by restoring a free market economy and a sound currency and restoring liberty to all of us. The financial structure has been internationalized for decades, ever since we've had the IMF and the World Bank. And now since they've had the World Trade Organization, the claim is that we've had the 3 legs of the New World Order put in place. So those are serious problems, but ultimately it boils down to one thing, and that is our concern and our respect for individual liberty. The basic question that we have not yet asked, that we must ask if we expect to get our country on the right course, and that is, what should the role of government be in a free society?
We do live in an age where I think there's a lot more inflation than the government will concede. The Federal Reserve is probably more secretive than the CIA. And I, as a member of the Banking Committee, can't attend any of the meetings, and I can't audit it. They don't receive an appropriation. They receive all this huge interest payment, then they spend it the way they want, and we can't audit them. So I don't think it should be done. They should be, if we don't, up until we get rid of the Federal Reserve, they should at least be on budget, and the amount of money they spend appropriated and treated like another agency of government. But that is not likely to happen. They happen to have some very powerful forces behind them.
I'm concerned that we're going to have a world-class adjustment to the distortions that we, the Congress, the Fed, and the Treasury has created over these last several decades, and it seems like there's essentially no concern about that. These programs were originally set up to help people, poor generally, to get affordable housing. And here today we have a program that helps people buy a house and get a subsidy for it in their mortgage payment and get a house for over $300,000. At the same time, the administrators of these programs make millions of dollars. So I think we've lost our way on this. But the biggest concern to me is not looking at the real problem. And to me, it has been this implied credit and an implied guarantee of this credit. But are we going to get rid of this line of credit? Not likely, because that would cause a bit of chaos. But that's really what has blown these markets up, and they're distorted. Also, we have the Fed very much involved in this. They probably wouldn't admit it, but the Fed is capable of, and on occasion will buy GSE securities. Foreign central banks buy these securities because it's implied that the Fed is going to come to the rescue. You state that inflation is under reasonable control at the moment. I have a lot of constituents that would disagree with you and would disagree with the chart because if you look at energy and medicine and education and taxes, there's a lot of price inflation out there that they're concerned about. and I think there is a discrepancy in who suffers the most from higher prices. Sometimes the wealthy suffers less than the poor. In the middle class,
High gasoline prices make a lot of people angry, though there is little understanding of how deficits, inflation, and the war in the Middle East all contribute to these higher prices. We all know that ideas do have consequences. Bad ideas, even when supported naively by the people, will have bad results. Could it be that the people sense in a profound way that the policies of recent decades are unworkable, and thus they have instinctively lost confidence in their government leaders? This certainly happened in the final years of the Soviet system. Though not fully understood, this sense of frustration may well be the source of anger we hear expressed on a daily basis by so many.
Let's talk about the speed with which we are watching this market deteriorate.
We're red everywhere, essentially, down by 4-5%.
We're down over 16%.
Dow at the same time has fallen about 18%.
The stock market is now down 21%.
It was the worst day on Wall Street since the crash of 1987.
From the financial capital of the world, the opening bell is going to ring in 5 seconds, and to be honest with you, we wish it wouldn't.
Traders here working the phone say a lot of their customers are freaked out, waiting to see how low the Dow will go. They're focused on the Dow, not so focused on OPEC. Yes, OPEC did cut production by 1.5 million barrels per day.
Really, you're seeing just broad-based declines across all of the major technology sectors. Apple's under pressure, Yahoo down 8.5%, Cisco 6.5%, Research in Motion 10%.
And we're not getting the bid wanted. We're not getting the stop trading, and we see where the buyers are. We're just, every day they're pounding it.
The heightened financial turmoil that we have experienced of late may well lengthen the period of weak economic performance and further increase the risk to growth.
Many consumers already maxed out on their credit cards and concerned about a possible recession are pulling back. Nearly half of those surveyed in a new poll said they plan to use the rebate to pay off debt. About a quarter say they'd save the money, while only the remaining quarter say they'd spend it.
They are psychologically worried about the economy.
I want to read what you said 5 years before the collapse. The special privileges granted to Fannie and Freddie have distorted the housing market by allowing them to attract capital that they could not attract under pure market conditions. Like all artificially created bubbles, the boom in housing prices cannot last forever. When housing prices fall, homeowners will experience difficulty as their equity is wiped out. Furthermore, the holders of the mortgage debt will also have a loss. These losses will be greater than they would have otherwise been had government policy not actively encouraged over-investing in housing. And you go on to say, because so many people will invest in housing, the damage will be catastrophic. Congressman, how could it be that you knew this on the banking committee in 2003 and nobody else did until after the collapse?
Well, I would think the easiest explanation is Washington, D.C. is permeated by Keynesian economic thinking. Very few even know the name Austrian economics and understand the business cycle. I was concerned about the building of the bubble since 1971 when gold was delinked from the dollar. Founders knew and understood something about inflation. The runaway inflation of the continental dollar was devastating to the economy, so they were explicit. They said no emitting of bills of credit, no printing money, no paper money, and that only gold and silver should be legal tender. There is no authority in the Constitution authorizing a central bank, which means there should be no Federal Reserve System. No!
About what the Fed is doing and what they did do in the bailout. And we're finding astounding things. So the monetary policy is, to me, a very, very significant issue. What has happened in these last couple years? They did exactly what they perpetuated the same policies that gave us our crisis. It was too much spending and borrowing and inflating and regulating. But the inflationary problems, the creation of new money is historic. World history has never seen the monetary inflation that we have seen in the last couple of years. Trillions of dollars unmonitored by the Congress. And guess what that inevitably leads to? Higher prices.
The Federal Reserve keeps bailing out the rich. The welfare, the Democrats are seen as defending the welfare for the poor, and the Republicans defend the rich. The whole thing is they both defend welfare for the rich, number one. The military-industrial complex, the banking system, and the bailouts. They bailed out the very wealthy and the bankers in this crisis in the last 5 years, but the people lost jobs and they lost their houses.
Can you discuss your thoughts on Bitcoin and government's role in regulation of it?
Well, the government should keep their nose out of it. They can, state officials can become involved if somebody commits fraud. So it shouldn't be regulated by the government, and it shouldn't be taxed. One of the reasons I've been associated with cryptocurrencies has been because I've had legislation introduced for many years for competing currencies, believing that the dollar is in big trouble. And even today, and what's going on in Russia, the dollar is under attack and it's going to get a lot worse, so people are looking for options. Hayek, the great Austrian economist, advised competing currencies using a basket of commodities, everything. And I want the market to make the determination. We should legalize competition.
I know you disagree on a lot of things, but is there a part of you that feels a kinship with Senator Sanders?
Yeah, there is, because he stands on principle, and on occasion we agree on those principles, because we used to kid each other. We would support some legislation and people would say, how are you doing this with a socialist? I says, we're both against corporatism. We're both against the special benefits to big business, which was true. But, his answer to that wouldn't always be the same. Mine would always drift to the free market, and his would drift to, well, we need more government to redistribute wealth. But we could both attack subsidies to large corporations or the military-industrial complex. We know the recession is coming because of what the Fed has done over the past 10 years especially. It's the monetary inflation that sets the standard. And then once that's been done, and I'm talking about the QEs, once that's been done, you can't stop the recession. You can manipulate it and change it and delay it and make it last longer. But it's there, and it's starting to show signs of it, and it will come. They do not want you to think, oh, this is all the Fed's fault. Everything is done to try to distract from the Federal Reserve. They even talk about inflation incessantly. One of the things that annoys me the most is, well, we have no inflation, so we're okay. Right. Well, what is $4 trillion of a balance sheet? That's inflation, and it's caused all this trouble. We would have strong agreement that the Federal Reserve is way too powerful. They are the epitome of what central planning is all about, and we don't like central economic planning.
Full details of the approximately $2 trillion package are yet to be released, but it reportedly includes $250 billion for direct payments to families, $350 billion in small business loans, and $250 billion in unemployment benefits.
When Orange County prosecutors raided this strip mall store in Southern California, they found clothes and backpacks stuffed full of $100 bills, stacks of stolen taxpayer money meant for unemployed workers. In Colorado, officials disclosed that they have seen more fraudulent claims than legitimate ones. An audit in Nebraska found nearly 70% of CARES Act unemployment money was misspent through the first half of last year alone.
Several states refuse to tell NBC News how much they've lost in the pandemic. The prime suspects, crime rings, prison inmates, and cyber criminals.
It's prompted the Justice Department to launch a 50-state task force, and the Labor Department Inspector General is currently investigating, saying at least $63 billion may have been stolen. Experts say the real amount could soar well above $100 billion.
The U.S. Secret Service says nearly $100 billion has been stolen from pandemic relief funds that were intended to help struggling businesses and unemployed workers.
If you keep printing, it loses its value, and that's what's going to happen. I get the question asked so often, okay, you know, we'll talk about it politically and all the problems. So what should we, they want to know, when's it going to happen? When will the dollar crash and all this? Because on the international markets, the dollar still holds up because they're measuring against trash, you know, other currencies that print more than we print. So that doesn't work. The best way to measure it now, you look at the money supply and you say $6 trillion in 3 years of new money. That's a bad sign. But the sign that the people have totally caught on will be price inflation, the CPI and the PPI, and that's what is waking up the people.
After months of struggling with soaring prices and busted budgets, tonight Americans are now facing an even more grim reality. Inflation accelerated 7.9% in February compared to last year, a new 40-year high. Prices are up across the board. Groceries surged 8.6% over last year, rent rising 4.7%, and most of all, gas prices spiking 38%.
Stop me if you've heard this before. Gas prices climbed overnight here in the U.S. Now the average is $4.32 a gallon. Errol Barnett is at Reagan National Airport in Arlington, Virginia, with a closer look at how rising prices are impacting other travel expenses.
I think it's like outrageous.
Inflation. Prices in the United States increasing by the fastest pace since 1981 on the headline number, 8.5%. When you strip out food and energy, 6.5% on that CPI. Akiko, prices continuing to rise in this country.
If you strip out the all-important food and energy, expected up 0.4, a bit more, up 0.6. The high water mark here is up 0.9, and that was in April of last year, and that went back to 1981. And the Moneyball year-over-year headline up 8.3%.
Red hot inflation data. That's the biggest thing we're watching, of course, this morning. The Consumer Price Index coming in at 8.6% in May. That's a new 4-decade high. No peak in inflation is in sight. So let's take a look at futures here this morning following that data. And by the way, the core number was also higher than estimated. We are seeing futures taking a leg lower after the plunge that we saw in stocks yesterday in anticipation of this report.
Key report for June just released. Consumer prices jumping 9.1% year over year, the biggest gain in 40 years. Here to react, former Reagan economic advisor Art Laffer.
This inflation number is accelerating. It's not toning down, as they say. It's not topping out. None of that is true. This number is accelerating. When you look at the construction of this number, the number that was dropped off 12 months ago was a very high number. So this number should have dropped quite substantially. I thought down to about 8.2, but instead it's 9.1, which means we've got an inflation problem of incredible proportions, and there's no slowing down. It's accelerating.
8.8% was the expectation, which, by the way, was higher than the top line number last month. So we were already expecting an acceleration. This came in even hotter than that. It was eye-popping, to say the least. So when you look at sort of some of the gains, some of the biggest contributors, gasoline, which we talk about a lot, nearly 60% higher than a year ago. Food prices 10.4% and shelter 5.6%. So we talk a lot about gas, understandably. That said, the report, it was broad-based. We saw inflation pretty much across the board. And so this is a huge problem for the Fed. We were hoping that maybe the last few months we had peaked. You see a report like this, numbers like this, and it doesn't appear so.
Everybody doesn't suffer equally, or this wouldn't be so bad. It's always the poor people, those on retired incomes, that suffer the most. But the politicians and those who get to use the money first, like the military-industrial complex, they make a lot of money and they benefit from it.